Hi guys, I know it's been a little while, but I've been working on a lot of kind of cool, different things, and I figured it was about time I shared them with you. So I will warn you, this is a little bit different than the traditional no-nonsense Forex algorithm, but I feel as though it's evolved, if you will. And I'll tell you all about it. So I think that this might be a little bit of a longer video, but I want to make sure that I explain it all. I'm going to lay it all out there for you guys. I'm going to tell you all the indicators that I use. I'll tell you the indicator settings. I'll tell you what the entry rules are, what the exit rules are, so that you can get an idea of what it is I've been working on. Because I'm really starting to see some good success with this. So I'm hoping that I can start following the trades on a more regular basis. And hopefully after this video, you'll actually understand what it is that I'm doing. So let's take a look at this system here. So what you might notice, first of all, is it looks a lot different. I'm not using candles. I'm not using candles or bars. I'm using something called a Renko chart. Now, if you don't know what a Renko chart is, I'm not going to go into all that on this video. That would take too long. But Google them. They're very interesting. And the big difference is they're not time dependent. They print different bars or bricks, if you will, based on price movement alone. The next thing is you will notice that my baseline actually has 3 lines to it. So I use the Keltner channels for my new baseline. And I like to think of this not so much as a baseline, but a base highway. And we'll talk a little bit more about that when I go into the details. But this whole channel serves as my baseline. My C1, I'm still using SSL. So now, you should be familiar with SSL if you have seen any of my previous videos. Very simple indicator to use and follow, but that serves as my primary signal. My C2 is actually going to be the colors and direction of the Renko bricks themselves. Because of how the Renko bricks work, a change in color really can be a signal in itself. So that's how I'm going to be using that. And finally, my volume, I'm using an indicator called BB flat, and that's this one right here. Now, this indicator is actually based on Bollinger Bands. And I know, Bollinger Bands might be part of those dirty dozen, but I have found that actually when used with a Renko chart, which has a far less fluctuations here, that this indicator seems to work very well. So just going through real quickly. So for C1, here are the rules. You're going to simply look for buys on a green box and look for sells on a red box. For our baseline, or what I'm calling my base highway, the rules are, this is a danger zone, okay? It's like crossing a highway in real life. Think of it as anytime the bricks are within that highway at all, we're not going to trade. We're not going to touch it. And that means even if they're stepping outside of the line here, until they open completely outside of that highway is a no trade zone. So again, no trading when bricks are within the highway. And again, bricks must open outside of the highway, not just close outside the highway. And it's pretty simple. You look for buys when the bricks are opened above the highway, and you look for sells when the bricks are opened below the highway. So here are our BB flat rules. So this is a volume indicator, so we want to make sure that there is enough volume before we enter a trade. So what you'll see is you'll see three lines. You have your top blue line, your bottom red line, and then you have this yellow signal line. So what you're looking for, you want that yellow signal line to be above the top line for a buy, and you want it to be below the red line for a sell. If it's somewhere in the middle, no go. Again, it means that we don't have the volume to support the trade. Okay, so how do we know? What are our rules for entry? So here are the rules for a buy entry. Number one, our C1 needs to be green. These boxes down here. Number two, we need to see a bull Renko brick that has opened above the top of the baseline. Okay, so here's the top of our baseline. Bull bricks in this case are the blue bricks. We want to see bricks that have opened above that baseline. And finally, we want to see that volume is valid. This yellow line has gone above the blue line. And we simply have the opposite for sell. First of all, we look for our C1, which is our SSL, to be red. We want to see a bear Renko brick that has opened below the bottom of the baseline. So in this case, the bear bricks are white, and you can see how several of these have opened below this baseline. And then finally, we want to make sure that we have volume to support the trade. So we can only enter a trade when that yellow line is below the red line. So those are our entry rules, and here are our exit rules. Now the exit rules are pretty simple. Number one, we're looking for our C1 to flip, meaning if it was red, soon as we get a green, we exit the trade. Or what's kind of interesting about Renko bricks is that you can have something similar to a trailing stop loss because they are totally dependent on price movement. So one of the rules I've put in place for this algorithm is anytime I have three opposite Renko bricks in a row, whether that's bull or bear bricks. So let's just say I was in this trade. So if I'm coming down with a sell, then all of a sudden I have one bull, two bull, three bull. At this point on that candle right here, I'm sorry, not candle, brick, I would exit the trade. Okay, now granted, our C1 may have flipped before that, but that's just my rule, and it's whichever comes first. Either my C1's going to flip, or I'm going to have three of the opposite Renko bricks in a row, and that's when I get out. Now, even though this new evolved, quote-unquote, system is based on no-nonsense Forex methodology, there are some key differences. So I want to bring that to your attention so it doesn't get frustrating for you when we get into the charts and you're like, but wait a minute, what about this and what about this and what about this? It's almost like we have to unlearn a few things, so bear with me. The first one is we're not using the daily time frame. And the reason for that is because we're using Renko bricks instead of candles. And again, Renko bricks are not time dependent, so we will not get a candle every day. We are going to get these bricks formed when price has moved a certain distance. We're not going to be using the 1 ATR rule for the baseline. We are going to allow trades to occur anywhere above or below the baseline. Can be as far away, as it needs to be. Likewise, we're not using the bridge too far rule. Okay, so that's that 7 candle rule, or the bridge too far. We're ignoring that. We're also not using the 1 candle rule. which means as soon as we get a C1 signal, we are looking for the first alignment of all the indicators after that. So it can take as long as it takes, but with the Renko setup the way we have it, we're just looking for everything to be in alignment, and then we can take a trade. And finally, and I will say this is a big one, we're not using the ATR to calculate our stop loss and our take profit. Instead, we're using a set stop loss and take profit based on our Renko brick size. Okay, when we get into the actual trades, I'll show you the stop loss and take profit and how I have it set based on my Renko brick size. So yeah, a lot of differences, a lot of similarities, but I'm really enjoying this new system, and that's why I just wanted to make sure I took some time and I shared it with you. So let's stop here. This is just kind of the background, and let's jump into some actual charts and we can see what this looks like. Okay, so let's take a look at what it actually looks like in the chart. First of all, I have my Renko bricks, and I have my Renko bricks. This happens to be my software, but right here you can see I'm using a Renko brick without a wick, and I have them set to 10 pips per brick. Sorry. This 100 refers to points. So 100 points equals 10 pips. So that's the first thing. The next thing is, let's look at our baseline. So if we open up our charts indicators, so these are all of our indicators. Let's take a look at our Keltner channel inputs. So if you want to do a quick screen grab, here are the inputs for the Keltner channel. I have a moving average period of 60, a mode of 0, the price mode of 5, ATR 10. The K is kind of that deviation of 2, and an ATR mode is false. And if you look at how I have my colors set, I have my top line blue, the middle line white, and the bottom line red. So there you go. There is our Keltner channel. The next indicator is our C1. This is our SSL down here. So let's take a look at that one. The main thing to look at is the pound level for your SSL, and I have mine set to 7. Finally, let's take a look at our BB flat indicator. Okay, our inputs, I have it as a period of 20, shift 0, method 0, price 0, and I'm using a deviation of 1.3. So those are the parameters. Let's take a look at the colors now. Okay, so I'm using nothing for the top buffer. Then the number 1 is blue, that's my top line. Number 2 is red, that is my bottom line. And then I'm using yellow for my third buffer, which is the actual signal line. So let me go back over here in case you want to grab a screenshot of the inputs for BB flat. Okay, cool. Now the other indicators that I happen to have on here is this show pips. Okay, this is a free one that you can get from the market, and whenever you have an open trade, it's actually going to tell you how many pips you are in profit or out of profit. And I'm also using this vertical line at the current bar. And let me show you what that looks like. And I simply changed the line to gray. on that one. Let me show you what that one looks like. That's this line right here. See this line? As this chart moves along, that will always be on your most current bar. So it helps you to look at lining up all of these things. It's just a visual cue. Now this dotted line, this purple dotted line is one that I put on there at the beginning of each week because I put it back 2 bars from the open one. So I have one completed bar in between from the current bar and where I have my line, and that helps me judge where did I actually start the week at, because again, these aren't based off of time. Okay, so let's see if we can find some actual trades. So if we look at our chart, let me get my crosshairs together. We start at this side. We can see that our C1 is telling us to buy, but our bricks are below the highway, so no deal. All along here, we're in the highway, so we're in the danger zone, and we don't want to have any part of that. The first brick to open outside of the highway is right here. We do have a green SSL bar, but you notice on our BB flat, we don't have enough volume. So that would be a no-go. That one, same thing, not enough volume, and then we go back. Okay, here's another one, no, not enough volume. That one's very close, but it's still not over, not enough volume. And then we go back to red. So now we have our brick opening above. We have a green SSL, and it looks like we're starting to get volume. And I would say on this brick here, this is where our volume has actually crossed. So this would be the brick that we would open at. Okay, so let's see the rules for actually placing a trade. Now that we know where we're going to go in at. If you remember, we said this was going to be our brick that we entered on. So let's go up here and let's see, is it this one? Let's put a line here. Okay, that's our entry. So now we want to do our stop loss. So our stop loss is going to be 5 bricks down. So in this case, remember I said that we calculate our stop loss and our take profit from the brick size. So our stop loss will be 1, 2, 3, 4, 5. So let's change that. Let's change that to red. That is going to be our stop loss, which is going to be 5 bricks down, and our first take profit is going to be 3 bricks up. So 1, 2, 3. And that is our take profit number 1. All right, and again, this is the candle. I keep saying candle, I apologize. This is the brick that we are entering on. So as soon as that closes, we're going to enter on that new brick with everything lining up. So that is going to be our trade. This is the parameters that get put in. Now, once our price, just like no nonsense, gets up to here, we are going to take our first take profit and we're going to move our stop loss to break even. And then we're going to let that second half of the trade just run. And we let it go until we see our exit. Now remember, our exits are 2 things. It's either the flip of our C1 or it's 3 opposite color bricks. So in this case, if you notice, there's our third opposite brick, 1, 2, 3, and it also lines up perfectly with our C1 flip. So we know that is definitely where we need to get out of this trade. So this is where we would have ended up. And if we see where that takes us, that took us to about 149 pips, which was pretty good. I'll take it. All right, so if we go along again, so now we just exited this trade. So we see that our C1 is telling us a sell signal down here, but we're above our highway, so we're not going to do anything with that. We are not going to do anything until we have this brick that opens below the highway. However, you see that even though our C1 agrees, our volume, that yellow line, has not quite crossed the red line yet. So now we go back into our highway, so we're not going to trade there. Here's our next possibility, but again, no volume. And one more try, and you can see that that signal line for our volume is actually back up in the middle. So that is no trade. So none of those would have been taken, and now we're back in the highway in the danger zone. We have to wait until we have a brick that opens outside, and in this case you can see that our C1 is green and that we do have enough volume. So this right here would be our opening brick. So let me go get our lines here. Let's see. Let's get our opening first. So our opening brick was right there. And remember, we said our stop loss was 5 bricks down. So this is 1, 2, 3, 4, 5. So there's our stop loss, and our first take profit is 3 bricks up. 1, 2, 3. All right, so that would have been our trade. So we would have gone into the trade as soon as we hit our first take profit. We would have moved our stop loss to break even, and then we would have started looking for our exit. Okay, so we're going along, and actually in this case, we run off the chart with no exit. Let's move our chart a little bit and see where that would have come out. Okay, we have one opposite. So here is where we would have come out. This shows us the flip of our C1, and that occurred before 3 opposite candles. So that's where we would have come out. So let's see what kind of trade that would have given us. That would have given us, looks like about 70 pips. So there you go. That is how you're going to calculate your take profit and your stop loss. And then you're going to, once you put your trade in, you're going to move to break even once you hit your first take profit. And then you are going to just look for the exit. I hope this is helpful. I'm sure it will make a lot more sense once we actually go and review some of these daily trades, which I'm going to try to be much more diligent about doing. But thanks for sticking with me, and I hope you enjoy this new adventure using our NNF evolved algorithm, and we'll just see how it goes. So hang in there, and we will see together. Thanks for watching.